That's it. And pass you straight over to Tom Williams. Tom.
Yeah, thank you, Peter. Thank you, Rita. Yeah, hi, everybody. It's Tom Williams here, speaking to you from Worthing, a nice little resort town on the south coast of England. The beach isn't very far away, and the spring and summer seems to be wanting to arrive. Anyway, I mean, Peter said I wanted to show you this. Well, I could show you any of these charts, and you could read a story into any of them. No matter what time frame you look at, or what instrument you're looking at. Now, this is a weekly, right? Yes. A weekly chart of the future, the S&P, and we can see why the market looks weak, and it's been falling heavily. I mean, look, if that's not a beautiful upthrust, yeah, even the computer agrees with us. Read the dialog boxes, please. That's it. Look, there's a lot of information in there. If you've got any queries, just ask us. Okay, that's an upthrust. It's a sure sign of weakness. And why is it sure? It's a certain sign of weakness because professional money, they like to gun it up at the end of their little distribution phase, or when they see there's simply no more they can get out of it. They mark it up. Usually, well, I say usually on good news, but it can be marked up on good news. I believe there was something, wasn't there, the other day news? Anyway, look, they mark it up. They catch all the stops above the market. Remember that, especially in the S&P 500, there won't be hundreds of stops, but thousands of stops above and below these markets. And it's very, very profitable to gun it up there, catch as many stops as possible. They may be only up there I've seen them catch stops in a few seconds. I've actually seen that. So they're only up there a few seconds. But anyway, they ram it up, catch as many stops as possible. They mislead as many people as possible. People, they think, oh, look, it's going long. I'm going long. And of course, they're going long in a weak market. And if anybody is, should we say, clever enough to have been short, then they panic. They think, oh, I'm wrong. Look, it's going up. And they may close out. And we know it's an artificial markup because look at that low volume. Look. Very, very clear. Volume, as far as we're concerned, is relative to the previous two bars. And look how low it is. So what that's telling us is that very low volume, that markup like that, after a dodgy looking area, which I can't describe to you, close on the low, that is an upthrust and a serious sign of weakness. This causes market to fall. There's a lot of supply around. And don't be surprised if this market doesn't hit that lower trend line within the next week, perhaps, but whatever you think it might do, it probably won't do it. You have to base your judgment on facts, not what you think. It's got to be based on facts. But here's the weekly chart, look. There's a nice shakeout back here, look. Plummeted down. Bottom reversal. Now, the only fly in the ointment there is, yes, it got very close to that lower trend line. But on this up bar, closed on the high, look, the volume is fairly high. Markets don't really like high volume and up bars. There is a signal on there. And that's saying that those two bars are a basic test, which is fair enough. Okay, so, but anyway, There is some supply there, which we keep in mind. However, up it goes. Now, this is an important bar here, right? We've seen some, what we think of supply on this bar. A little bit of no demand on that next bar. Now, what do? They test the market. When you see these red down bars, narrow spread, closing middle or high, and the volume is obviously low. Low volume is volume that's obviously lower than the previous two bars because we use relative volume. That's definitely a test without any question. If you were going to write a book on the subject, that's the type of thing you would demonstrate or use to explain a test. It's not a perfect test, but it's close to it, look. On the back of that, up it goes. They mark it up. There's obviously must be a bit of supply here. What's that signal say? Ah, yes. Yeah, read these dialog boxes. Actually, they're quite clever, to be quite honest. That's a reversal after an effort to rise, which obviously is a bit of sign of weakness. Now, just because you see some weakness, don't forget, they're distributing and they're holding the market up here while they're selling more. Obviously, they want, there's too much supply around. So they mark it up again. Right, the volume is quite reasonable, look. On that, it closed well off the high, look, top quarter. There's another test, look, and the volume is, have you noticed the volume is low, but not so low as this one here. Volume's not so low as this, look. So that's a warning. Right? That's a warning to you there, look, that there's a bit of supply there, and then comes the upthrust. They mark it up, probably on some good news, right? But I've described this upthrust. Whenever you see these upthrusts like this, Rita spots them straight away and makes a few $100s out of that. Okay, it's very, very obvious. They turn it around, and that's weakness. So that whole area must be a little distribution cap, right? Don't be surprised if this doesn't hit the bottom trend line somewhere along here next week. Now, before we move on somewhere else, any questions, please, about this weekly chart? We don't often show weekly, but you can see the information's there on all these charts. Rita's busy looking at the screen here, or her screen, and Peter is. Nothing's come in yet. You got something? No questions. No questions, Pete? No. Everybody knows everything. No questions, good. Right, let's see what's happened today now. Can you put a 20-minute up, say? What's that, Rita? Someone's asking for the weekly of the NASDAQ. Yeah, we can look at that. Weekly NASDAQ? Yeah. You can put NASDAQ up? Yeah. Now, the NASDAQ is kind of interesting in a way because it seems to lead the market. Now, why that is, I'm not sure. The NASDAQ, of course, is a computer standing on the floor somewhere. I remember walking through a building where they had this computer, supposedly, and there was a big bunch of guys in white shirts studying the screens very, very carefully behind glass. Now, I'm not sure what they were, but there's obviously people got their eye on it. But this is a NASDAQ, and it does seem to lead the way Of course, that bar there, whenever you see these up bars, I've got my up bars in blue. I believe you can do your own colors, but blue always seems, I can see it, and red for down. But look how that's gone up after 2 bars, right? But look at how the spread has narrowed. You see, you can almost read these charts without even looking at the volume by looking at the price spread. That's why we call it volume spread analysis, because something capped the top end here, didn't it? That means that when any buyers came in, wanted to mark that up higher, right, those buyers were satisfied. But they weren't many because the volume's low, look. So there's your first sign of weakness. Must say no demand. Does. Good. There you are. Computer agrees with us. Right, no demand. Professional money, you could see that perfectly well. They still mark it up in harmony with the Dow and the S&P 500. Up, but don't forget this is a weekly chart, and that's where your up thrust was in the previous chart, and it's rapidly fallen. Remember, markets crawl up and fall down. And of course, the reason why they fall is they're locking in traders into poor positions. That's why they do that. Because then they know, see, don't forget that if you're a professional trader, you are personally, or that you certainly know what the herd or the traders out there are, the response to your sudden moves in the market. And that's why they do that. They know perfectly well that when they have these wide spreads down, Gavin's picked a good name for them, gotcha bars. That was his terminology used, and I thought it was very good. And even that's a weak bar, look. That's an up thrust, look. It's falling. I'm not sure where our trend line is on this chart, but you can see that was a distribution cap. And look how it mushroomed over. That's also a sure sign of distribution. So if you use the point figure, you can take your count probably from the top of there across to where supply first came in. And that will give you a very good indication of how far it was going down. But we don't have a point figure to show you. But once you learn to read these charts, you can tell what this market's more or less going to do. Okay? Any questions?
Yes, Edmund is saying, I wonder if that no demand bar is actually no demand. It is as much a test as a no demand, especially with the next bar up.
Which one?
The one with the red arrow, the no demand.
Here?
Yes.
What's that bar?
You do say sometimes tests are up bars.
Well, I have said in the past, admittedly, that sometimes a test and up bar, that's not test. Test is a down bar. And don't forget, this is a weekly chart. I could guarantee that if you looked at that, right, that is not a test. That's an up bar, no demand. A test is where it's clearly marked down, narrow spread, close in the middle, volume is less than the previous two, and you've got strength behind you. Now here, admittedly, we've got a bit of strength, but look at the other chart, look a bit dodgy in places. That is a no demand up bar. It's not a test. It doesn't even look like a test, does it? Not to me anyway, and I'm sure if you look at that. But you need to recognize a test, a proper test, first of all, a proper test. The high is usually certainly not higher than the high of the bar before. But I think that one is, isn't it, Rita? I mean, I'll put it on my enlarged so I can see it properly. Oh yeah, no, that's definitely not a test, look. If that was a test, you certainly wouldn't have the high higher than the high of this previous bar. Would be down. I mean, that's more like a test, look. This one. But of course the spread's too wide. But there's a sign of weakness there. I think I called them originally hidden up thrusts. You've got down bar, they know the market's weak, right? So they know the market's weak, look. So they ram it up, look. Catch all the stops, mislead as many people as possible. Then pull the plug and collapse on the low or near the low. And that's why it's come off, look. That is supply there, look, no demand, look. So as they marked it up, look, there was no demand. Well, it's a weekly chart, but you get the knack of looking at all these things. Any questions?
So if we were to go short on this chart, where do we enter a trade?
Well, you enter a trade only when you see a principle. Now, I can't really sit here and tell you when to go in and when to sell and all the rest of it. That would be too much of a nightmare for us, as you can imagine. What we try to do is to get you to read the chart so you can make your own decisions. Now, if you see a no demand up move now, or another up thrust, then you can short that. But right now, that's why they have these down bars, gotcha bars, because now people think, oh, well, yeah, it's weak, but I'm too late. I'm too late to get in. They don't want you shorting, not now in a weak market. They want to anticipate it's going to go up again. I mean, if you believe the charts, right, got weakness here, look. Then these bars are no demand, look. And that one, but don't forget you've got the Dow and the S&P 500, which will collaborate a lot of this stuff because they are one of the same. These markets will move together. You'll never see one market in a bull move and the other one in a bear market. They can't do. A lot of them are trading the same stocks.
Right, we're putting up, this is the pound, Tom.
What?
The pound, British pound, hourly chart for Louis. Louis wants you to have a look at this.
Yes, Louis. Well, look, I think we were, I mean, Gavin's on your left about an hour or so ago. I can't remember whether he traded the pound, but he was here 3 days. He made $600. These are the small account. $600 first day, $800 the second day, and it's $1,000 on the last day, dollars. So he's not frightened of jumping into the swimming pool at the deep end. And if he's wrong, you get out. But if you pick the principle right, you won't be wrong. Now, the problem is, like take example here, it looks like a test. However, you've got lurking right over you, it's two signs of weakness, up thrust. So that's not healthy. Look, you don't go long. Up thrust. Supply coming in, look. You see, don't forget, the professional operators are fully aware of what we're seeing. Don't worry. They know when there's supply hitting this market. I mean, we had a trader come in to see us, must be a few weeks ago now. And he said he actually worked on the floor in London of the metals exchange. He said, oh yes, he's had a great time. He said, my desk was right behind one of the metal people, and I could see over their shoulders, I could see all the supply that was coming in. And he was shorting and buying on that, back of that. Right, so the pound. Okay, so I believe was quite a bit of weakness in the background here. Yeah, there's weakness here, look. But the markets will zigzag up and down. It all depends on your style of trading. We more or less, when we're talking, we're thinking of scalping, where you're only in the trade, what, an hour or so, Rita, is it?
Yeah.
But we find that more happier position. But if you're a fund manager or something and you're trading, especially if you were trading other people's money, you'd be more interested in longer term charts. Like even look at the monthly chart, because there the trend will be pretty accurate for you. But as far as we're concerned, I'm only a small trader now. We find it far more satisfying to scalp the market, especially.
On this chart, Kjo's saying it's an old high on the daily chart.
Yes.
So, how that would influence what you're...
Well, I mean, there's obviously weakness here, look. These are gotcha bars. We seem to have a bit of support coming in here, look.
Potential climactic action.
Well, yeah, okay. It wouldn't be climactic action, not in the pound, because it hasn't fallen enough. It's fallen, but I don't think. Well, it's still. Climactic action means a professional to come in and buying, and it certainly looks as if they have bought something here. But the reaction to that buying, look, we've got a blue up bar, and the volume is fairly substantial. On saying that, there's the down bars, look. Supply seems to have disappeared. So you would expect some sort of little up move on this, on the back of that.
Look at the daily.
Yeah.
Someone's mentioned the daily.
What's this, a weekly?
This is the daily of the pound. So he's saying it meant we're at an old high.
Oh, I see, yes. Yes. Can you remove that trend line, Peter? It's sort of,
Yeah.
I thought we got rid of that last week. It's sort of putting itself a little bit in there.
Yeah, so there's the old high.
Good.
That's the daily.
Well, we're level with an old high, and there's supply present by the look of it. Now, to get up through that high is very unlikely at the moment. You really wouldn't want to see at the bottom a decent shakeout. where they marked it heavily down as the bad news, shook a load of traders out. Those shakeouts, they like create a vacuum. It tends to suck the market up. But when we look at this market now, we're at all high. And there's our old friend, look, high volume. Here it is, look, very high volume in that bar. We've got no demand, look, on that bar.
Yeah, no demand.
And you could see that clearly. So the professional people would be fully aware of that. Definitely. Up bar, the volumes increase. They're selling, aren't they, on that bar? Note the narrow spread. It's an up bar, but note the volume is fairly high compared to that bar, which we can see has no demand. They're selling on that bar. They're probably holding the market up, and it will probably chop sideways. But at that stage, it's highly unlikely to go up through that high to the left, the old high. Well, it won't go up there. It can't go up there when there's no demand and supply on one of the bars immediately after. They've had a little bit of a nut move as well, look. So they're probably quite happy with that.
Yes, correct, Chris. Volume from e-signal is shifted on daily bars. So should we put up the end of day then instead? Just because there's also. All right. On. So what's that, the pound? Yeah.
I haven't updated yet.
Oh.
What's that?
It's not updated. Let's have a go.
Yes, it is. It's the 10th.
Currencies always come up to the.
All right. But while we're doing that, Keijo says, what if we were to see no supply on the lower trend line on the pound? Can that cause it to break that high?
Now, if it goes down to the lower trend lines and there's no supply, all that's going to happen is they're going to buy some and take for another leg up. But that's not enough to push it up through the whole high to the left. You have to have more than that. Peter's just downloaded the daily chart, which we hadn't done. So bear with us for a minute. What? Now, what are we looking at there? Wrong one. Well, that doesn't it like an upthrust in the previous bar? Excuse me. This is the pound, is it? Well, that's interesting. There's our test. That's why it went up that extra leg, look. When you see a down bar, narrow spread, close in the middle or high, and the volume is less than the previous two, that's definitely a test. And on the back of that, that's why it went up, look, 3 bars. And I'm sure that there's stopping volume of something back here. Now there's, I think, an example of no supply. It's a down bar, look. Narrow spread, the low is in fresh low ground. The volume is low, sufficiently to bring up a signal, and not only that, a yellow box as well. And on the back of that, it went up because there's no supply. However, look, that'd be a, well, I was going to say a 50% retracement from the low to the high, but You have to draw them to be sure, but this is a certain sign, look, that's a test. They've gone down 3 bars. The third bar, look, it's down, fresh, low ground, which we mean like this. The spread is narrow, it's close in the middle, and the volume is low. That's what brought the signal up. Strength coming in, that's what produced that. On the back of that, up it goes. They're trying to push up, widespread up, as they go through this high here. That's the ploy, because they don't want anybody that was locked in here to sell. They want to keep them in. Right now, I mean, you could draw a trend line on those 2 lows if you wanted to there, here, first high. Yeah, first 2 lows. That'd be an intermediate trend line, of course. They all work. That's it. As long as it's on that's it. Now see, I like trend lines because they give you an idea where it's going to go. And look here, it's come off a little bit, but it's overbought, isn't it now? There's nothing there that would get me excited. I can't say you go suddenly buy or go short or anything. In other words, what you see you're going to get here is trending up, look. There's not a lot of supply here. I can't see any sort of supply that's going to say that's going to destroy this.
Someone's asking for us to look at longer picture. Just
go on then.
The 21st of Feb. 21st. Saying the previous high you see here, I suppose.
Yes. Well, we're reaching that high, aren't we?
Yeah.
It does seem to be little or no demand at the top, look, which we saw in the other chart, didn't we? Yeah, so I would expect that to drift off to that lower trend line. It may have a go at that top sometime in the future, but right now it doesn't look as if they are going to.
Eidman has a question on a previous comment you made. Why do they want to keep them in? Is it because they want higher prices?
Well, the reason they want to keep them in is that those people locked in those highs, they would have to buy the professional off them at a much higher price than they'd like to. Right? They want to shake you out. They want to make you sell on the lows, to make it cheap. In other words, that's why we get, we call it volume pushing through supply to the left. Right? If they're very bullish, they will absorb any selling from people locked in these highs. There'll be thousands and thousands of traders locked in these bars here. And when they saw it fall like this, right, they weren't very happy. Okay, and how human beings think. Don't forget, if you're a professional, you know more or less how the crowd thinks. Right, so if you're locked in here and it falls, you're not too happy because you can't read the charts like we do. Okay, and they got in mind, they said, right, well, if that price shoots up there, I'm getting out. Now, professional people know that. So that's why they gun it up on these wide spreads up through, because they don't want to have to absorb selling from these people. Right? They want to shake these people out. Now, if they're locked in at these levels, they'll get locked in again somewhere up here. In other words, they make a mistake here, they'll make a mistake higher up too. We're talking about herd behavior. And it works if you think about it. You know, I always use the analogy of if you stand on a stage in front of a packed theatre and shout, "Fire, fire," you know, if you're a professional fireman, what's liable to happen. Or a bomb or something, you know, whatever. You know what the panic will be. You know what people will do. Well, professional traders know as well what you do when they do certain things.
Okay, Louis asking for the Aussie dollar daily and hourly. So start with the daily chart here. Let's just put up more of a picture, Tom, first. From where?
First two lows.
Down here?
Make sure you're on a low.
That up here.
First high. Make sure it's on a low.
Yeah.
First high here. That's it.
Do you want me to put less down?
Well, thank you, Rita. Rita drew those trend lines. In a bullish move, you draw trend lines through the first two lows and the first high. Make sure the lows are on down bars and, of course, the high is on up bar. And that will give you a very, very good indication of the trend, should we say. Yeah, put less bars up now. Now we can see it's hit the top of the trend line. And we can see what looks like it's hit something wrong here, some supply. But I can't see any massive volume. In other words, massive selling. So this is weakness, admittedly, but it's not a great lot of weakness.
Click on that yellow box if you like.
Yeah, well, go on. Well, that's what's that up thrust?
Supply coming in.
Supply. Well, there's a bit of supply. Well, you'd expect it, wouldn't you? It's overbought. In other words, it's over the trend line. There will be somebody in there deciding to take some profits. It's marked up too, so that will create a bit of havoc. But there's no great sign of weakness there. On that sort of weakness, you'd expect that market to go sideways and perhaps even go up a little bit on that upper trend line. But when weakness appears, you'll be able to see it. Weakness is when professional money come in with 50, 100,000 contracts and start selling or shorting or whatever.
Let's put the hourly chart the same with the Aussie
Yeah,
dollar.
okay, now, what, sorry, that's the Aussie, is it?
And we're still going to be on the Aussie dollar, but the hourly chart.
Now there's an hourly chart, look.
There it is. There.
Well, there's obviously weakness, look, which we saw portrayed as an up thrust, look. There it is, look. Up bar, I'm sure it's hallmarked or... Oh, here.
Supply coming in.
Supply, yes. On that, turns around, bang, got your bar, look. That's a top reversal. And that's what we saw, which is a sign of weakness. But there's not a huge amount of supply there. And it looks like there's a little bit of support on this down bar. Mind, these red down bars, like this, are closed near the low. It's normally you'd have to say as a sign of weakness. But on saying that, it's not going to collapse immediately. They want to probably distribute more. There's no demand, look. So that looks as if it wants to do what the other chart said. It looks as if it wants to drift sideways and slightly up. There's some selling there that's made it hesitate, but not a great deal.
Okay, we're going to look at crude oil for John. Let's just, there's a bigger picture, Tom.
That's crude oil, is it?
Yeah. Well, that says the 9th of April, Peter. So that's not quite. Just got to update it. That the last bar was the 9th. One moment.
Right, it's up to date. Crude oil. Well, we saw a bit of weakness there, look. It was marked down for 3 days, but look. There's our old friend, the test, look. There it is, look. Down bar. This is what we call into fresh low ground, low bit. There's nothing sort of immediately to the left within a bar or two. It's down bar. It's obviously a narrow spread, look. Note the high is not much higher, if anything, than the close of previous bar. That's what they do with tests. In other words, they mark it down from the start. Been marked down. There's no selling pressure. Right. There's a little bit of volume, but not too much. Close near the high. That is definitely a test. And I'm sure that signal tells us that. Basic test. Look, study that because you see them all the time. They're money-making signal. Definitely a test in a rising market. Crude oil. There's another bit of a test there, look. Well, that test is because of that. They saw that up bar, look, no demand.
Yep, no demand.
They would see that, professionals, so that just to play it safe, don't forget they're dealing in thousands of contracts. They've got to get it right. Mark it down, see if anybody's panicking here, but they're not, look. It's down on a narrow spread, closing in the middle. Volume is certainly, what's that, average?
Yes.
Just above average, but, you know, it's a sign that everything's not too bad. On the back of that, they mark it up, look, gap it up, or push it up as fast as they can through these old highs. So that looks still bullish. But if you see a test again, you can scalp that and make some money on the when it goes up after the test. There's different ways to trade these, of course. We're just talking about scalping.
There are no other questions, so let's go back to the S&P, shall we? The ES. What time frame do you want? Well, that's a 7 minute. What time frame do you want, Tom?
I don't mind. What you got, an hour?
Well, all that's up there is 7 hour. All that's there is 7 minutes and 1 hour. I can put another one up if you like.
I'll put an hour up, see what's happening.
Hour.
Well, it's choppy because there's supply there, look. Didn't we look on the longer term chart and said it might, don't be surprised it doesn't fall to that lower trend line? Yeah, the weekly. Well, there's too much supply, look. Markets don't like ultra-high volume on these up bars. And look, there's a blue up bar, and look at that high volume. And even that one, they don't like that. It's Friday, so they're going to probably try and mislead you as much as possible. And it looks like an upthrust in the background, look. Point out, there's an upthrust, look. There. That is a sure sign of weakness. When you see those upthrusts, Rita would recognize that immediately. When she's busy cooking over the gas stove or electric, and she has a computer on, and she can see what's going on. But that's a sure sign of weakness. And I know without even looking at it, this has to be here, no demand. Is that no demand? Must be. Must be. Now I made that statement before I even looked at this. So there's your so there's your up thrust. Not to mention this weakness here. There's your up thrust. There's your no demand. Professional money are fully aware. They've seen that. Don't worry. They're fully aware of that. And that's their response. But there's too much supply here. Look, especially that bar there. Look at it. There's too much supply for that market to suddenly say, right, I'm going up. Markets work on supply and demand. And supply and demand is caused through professional money. They bully their way in and really out of the market as well. And that's what interferes with a normal supply and demand. If the market was just left alone and nobody could trade it, you just probably get a nice little average line moving along on inflation. But as soon as you get professional money throwing in 50, 100,000 contracts, then it alters the balance of supply and demand until another force comes in and changes it. And that's how they make their money.
Request to look at 5 minutes chart.
Of what?
VES.
Right.
So, this is the 5 minutes.
Have you got a trend line on it? No. First two highs. Yeah. First low. Make sure they're up bars here. Yes, the drawn trend lines is not all that easy. We'll have to first have support here. So Wyckoff, what you call a Wyckoff, yeah. When the market's falling, first 2 points of supply, first point of support, there they are. There we are. Yeah, the 5 minute chart, that looks as if it's going to float down to that lower trend line today. What about the Dow?
Tom's saying, what about the Dow? So let's have a look. Right.
Same thing.
Same sort of thing.
They all tell you a story.
Yeah, Tom.
Thank you for putting that up, Pete. They all tell you the same story. There's your up thrust, look. It's a nice one. There's your no demand, confirming the up thrust. It falls, that's really a gotcha bar. Now it zigzags out here, but look at there's too much volume here, especially on these up bars. It's these up bars the market don't like. This is high volume. They don't mind it so much on down bars, as long as the spread is narrow and you've got some sort of down move behind you. But they don't like the high volume on up bars. That's why it's come off, look. Admittedly, there's not a lot of selling pressure as we speak. So you certainly wouldn't want to short it right now, but you wouldn't. Well, there's no really clear indication. You've got to be so careful. Trading these markets like this, they say, is one of the most difficult things in the world to do. At least what we teach you is simplifies it. You've got some idea why and what's going on. But you would expect lower prices.
All right, folks. Okay, so I think that is about it for this week. We're doing a newsletter on Sunday. Is it true that Gavin's not doing his closing just heads up, Gavin's not doing his closing bell today, but he's doing a Monday opening bell. I don't think he's calling it that, but he is calling it that. It's the starting bell on Monday, so tune in for that. Otherwise, we'll see you all next week. So thanks for coming along and have a good weekend, and we'll see you all next week.